Okay, FOMC. Well, if you guys actually did tune into the currency call yesterday, then pretty much no surprise, right? I mean, I've already pre-warned you guys about what's likely going to be happening. Okay, so the FOMC, okay, Federal Reserve, they held interest rate unchanged at the targeted range of 0 to 0.25%. Quantitative easing remains unchanged at 120 billion US dollars per month. Okay, now no QE announcements was made. Okay, so what's the difference between this meeting and the previous one? This time around, okay, they actually delivered a hawkish tone, a hawkish statement. Let me just share my screen with you guys. Okay, so this is the rate statement. All right, I'll be pasting the link at the chat later on. So let me get the moderation. Yep. Okay, so this is the bond. Since then, the economy has made progress towards these goals. What goals? Okay, the goal of maximum employment and price stability. Okay, so since then, the economy has made progress towards these goals. If progress continues broadly as expected, the committee judges that a moderation in the pace of asset purchases may soon be warranted. Okay, that is the hawkish point that the Federal Reserve delivered. Okay, basically, yes, we do not make any announcements on tapering. But if, okay, the dual mandate, okay, maximum employment and price stability were to further improve, okay, then we can actually taper back our quantitative easing, okay, which is the asset purchase being mentioned here. That is the strong point, okay. So basically that's all for the rate statement, okay. It's just the rate statement. It's not the end of everything yet. All right. During the press conference, okay, Jerome Powell, the Fed chair, he actually mentioned this. Okay, I probably got like several things to quote today. All right, the first thing to quote: while no decisions were made, participants generally viewed that so long as the recovery remains on track, a gradual tapering process that concludes around the middle of next year is likely to be appropriate. You see, the difference between this time round and the previous meetings with an S, okay, is that a timeline, a vague timeline, I would say, okay, is being given, okay, around the middle of next year, okay, tapering process concluding around the middle of next year, okay, is likely to be appropriate. That is, of course, provided that the members' view are positive, okay, for the next few months, okay, leading up to next year. So that's the first quote, okay. On inflation, okay, this is Powell's view on inflation, all right? I quote, for inflation, we appear to have achieved more than significant progress, all right? More than significant progress. Substantial further progress, okay? That part of the test is achieved, in my view, and the view of many others. So it's no doubt that inflation has already been I would say the conditions for inflation to make substantial further progress has already been met, okay? In fact, already exceeding the central bank's target, I would say, okay? So that's for inflation. Now, on employment, okay, Powell said that, okay, I quote, for me, it wouldn't take a knockout, great, super strong employment report, okay? It would take a reasonably good employment report for me to feel that that test is met, okay? That test of achieving substantial further progress in the US job market is met, all right? So, I mean, early on this month, we see pretty, I would say, disappointing jobs report coming out from the Bureau of Labor Statistics, okay? So right now, for Powell to come and say, I don't need an outstanding, a super strong report, for me to be convinced that the condition has been met, okay? This kind of like, I would say, create some relief in the market, okay, in terms of the previous poor, disappointing figures, jobs figures. Okay, so for the upcoming jobs report, of course, ideally, it would be good if we can, have like at least some 700 over 800 over 1,000 jobs being created per month. Okay, but if it's actually falls slightly short of those figures, okay, those expected figures, chances are Jerome Powell is going to close one eye. He's going to make some leeway. Okay, so that's for the press conference. Now, the next thing that I want to go into, all right, is the quarterly economic projection materials. Okay, so just get it back again. Okay, so what you're looking at right now is the quarterly economic projection materials. Okay, so let me just go straight first into the dot plot. Actually, you know what? For the dot plot, all right. Sorry for all the screen sharing, but yeah, I just sort of like put together two screenshots, which I believe will help. All right. So what you're looking at right now is the dot plot from June 2021, okay, previous release, and the one that has been released earlier on today. Okay. Now, as I've mentioned, the attention will be on whether, okay, dots has been moved, okay, from the bottom to the top or the top down to the bottom. Now, let's start with 2022. Okay, 2021, all members pretty much expect interest rate to hold unchanged. Okay, so no surprise over there. Now, focus on 2021. Now, I did some calculations. Okay, so previously, 11 members, okay, over here, 11 members actually expect interest rate to remain unchanged at the current level for 2022. However, okay, early on today, we see that only 9 members are expecting interest rate to remain unchanged in 2022. That means 2 members actually projects, okay, that interest rate will be higher than this range, which is a hawkish move, hawkish tone coming out from the economic projections. Okay, so as you can see, previously I think there was like 2, 4, 5, 7 over here, 7, and then versus 2, 4, 6, 9, right? So from 7 to 9 members expecting higher rate, which is good, right? 2022. Now, what about 2023? There's only like 5 previously. Right now, there's only 1 member, okay, expecting interest rate to be higher, or to be at the same level, to remain at the same level for the year 2023. Probably some super dovish member from the Fed, okay, which unless they actually admit to who they are, okay, we won't know who they are. All right. So overall, from this projection material point of view, dot plot point of view, it's very hawkish. It's definitely very, very hawkish coming from the Fed. Okay. Now, back to the projection material. One final thing to share. It's the economic projections, okay? So, overall, I would say that the economic projection is quite positive, okay? Now, starting off with something that's not very positive, all right? GDP. In June, they actually project 2021 GDP to be 7%. Okay, right now they actually project a lower 5.9%. Okay, economic growth is expected to grow at 5.9% as opposed to a higher 7% previously. Okay, well, actually, this doesn't come as a surprise, to be honest. All right, because with the whole Delta variant hitting and things like that, the uncertainty caused by COVID. Okay, we can pretty much expect economic growth to slow down a little, all right? So that's for 2021, okay? Now, if we were to look at 2022, they are actually expecting 3.8 as opposed to 3.3, all right? Then for 2023, it's actually low increase as well, 2.4 to 2.5%, okay? Unemployment rate, okay? Unemployment rate actually increased as well, all right? So it's not very good for this year, which is again, due to the lockdown measures. However, for 2022 and 2023, it actually became better, all right? Well, not became better, but remained unchanged, okay? While inflation-wise, it actually improved, okay? Due to, the spike in inflation, as we have seen from the data. All right. So overall, we are seeing very positive data coming out from the economic projections. Okay. So I would conclude that the USD is likely going to remain strong for the short to medium term. All right, because of the hawkish message coming from the Fed. Okay, so the Fed will be meeting next time around in November. Okay, this gives them more time to look at the jobs report and the inflation report. Okay, so well, hopefully they will be making an announcement on tapering in November. All right, so that's all I have to share for the what's this US FOMC. Okay, next I will be talking about the Bank of England. Okay, from one central bank to another. The Bank of England will be meeting later today at 1900 GMT +8. Now, what to expect? No change expected. Okay, no change expected. However, pay attention to the potential hawkish tone that may be sent out by the central bank. Okay, now recall that recent inflation, recent data release was actually very high, 9-year high of 3.2%. Okay, so we would like to see if the central bank will respond hawkishly towards this piece of strong data, inflation data. Okay, and remember that during the previous meeting back in August, half of the committee members actually felt that the minimum criteria for consideration of a tighter monetary policy has been met. Okay, so it's, I would say, kind of a exciting thing to wait and see what the central bank will be announcing this time around. Okay, the Bank of England, because they have been doing almost nothing for the past few monetary policy meetings, right? So this time around, with this high inflation report, I would love to see something hawkish coming out from the Bank of England. Okay, but expect no change in interest rate, no change in QE, no tapering announcement from the central bank. But hopefully they will give us some insights, into whether or not a tapering is warranted or soon to be warranted, which may be carried out maybe during the next meeting, or later on in the year. All right, so that's all I have to share for the Bank of England. And one more thing, one last thing. Swiss National Bank will also be meeting today. Yeah, no change as expected. All right, in the first place, the Swiss National Bank has no quantitative easing, so well, we wouldn't be expecting anything coming out from them as this time around. All right, or maybe even for the next few meetings for the rest of the year. Okay, so Swiss National Bank, yeah, unlikely it's going to affect francs. All right, but remember, with the whole uncertainty dramas going on, Evergrande, Delta variant and things like that going on, the Swiss francs may actually be moving because it's actually a safe haven currency. All right, so in terms of uncertainty, like right now, we may actually be seeing a strengthening in the Swiss francs against the riskier currencies like pound, euro, New Zealand dollar, Australian dollar, Canadian dollar. Okay, so yeah, unlikely the Swiss National Bank's meeting will impact the Swiss francs. Okay, it's more like the current affairs going on around the world, political turmoil and things like that, that's going to move the Swiss francs. Okay, so with that, yeah, that's all I have to share. Come back tomorrow while I will break down what going to take place later on at the Bank of England meeting. Okay, with that, I will hand it back to Scott.
Thanks for that, Kim Hong. And just a quick recap as well. In the chat here, the live chat on the Zoom call, got a few video links that I've shared for the Facebook, not the Facebook, the YouTube page for LCMS traders, just on what Kim Hong did yesterday as well, just to give you insights into, we did definitely discuss all this in detail as well. So something to pay attention to with the YouTube channel. If you can't make the live call here for the daily broadcast, definitely check that out as well. And also Kim Hong shared that FOMC rate statement and also the projection material as well that we went over. And I've also finally shared, there was a pound trade idea shared yesterday by Jin. I ask you to just check that out as well, because it does look like we could have some potential here as well with that. But it is Thursday, guys, and I will share, just to begin the analysis, the US dollar index to start us off here before we get into the yen and gold. So I've got the chart up here thanks to Sam Trade, and this is the 1 hour time frame. I've just got it up here for the 1 hour just to show you we have, it's obviously during the Asian session, and typically what we'll see is that if we have a big move overnight, like we did see on the US dollar, we'll see a little bit of a pullback take place, which honestly coincides quite nicely as well with what we are looking for, trade ideas. But I just want to go to the 4 hour as well, just to give a little bit of context in regards to previous points of resistance. Now, we have seen the US dollar get as high as the 93.70s. We haven't seen that come about, although frankly, it did move, pretty aggressively as well on the back of what, was mentioned, but it wasn't anything that was too dramatic. I mean, if a taper was discussed even earlier than November, then we could have seen, and that's what people were a little concerned about. And there's been some factors there with the equities pulling back, but we actually saw a stronger US dollar on the back of those comments. And then we also saw the US equities actually, they sort of bounced back a little. They have been selling off, I think it's around 5% from the highs seen recently. They did, rally a little bit last night, but anything too dramatic. So what I'll get into now, guys, we will go and have a look at the economic calendar, because we do have the yen and gold in focus today. And we've got the economic calendar here with Forex Trading Asia. So I'll make sure I send the link for this as well. Highly recommend checking out. There's some good articles. If you like them, you get points for doing so, and you can accumulate enough and you can get a $20 Amazon gift card. So we'll just go to Wednesday briefly. I just want to touch base on the Bank of Japan monetary policy statement as well. And a lot of this was very much uneventful for the Japanese yen. Nothing dramatic was mentioned. And we'll go down now. Obviously, we had the FOMC, which was mentioned in detail by Kim Hong as well. We do replay this episode and we post it up on the YouTube channel as well. So please check that out. I'll post links for that as well after this. So for today, we have the public holiday for Japan. And we do, as Kim Hong mentioned as well, we do have high impact pound news too. So from a US perspective, if we're looking to trade, for example, the USD yen, there's not a lot of high impact news out today after obviously the FOMC. And it just takes a bit of time for the market to digest what has been said. And you'll notice that there could still be a little bit of volatility